Hello, good afternoon. How are you? Welcome to part two section of enrolled agent. I hope you're going through our website and then you've already seen what all changes we made. So, as part of this course, we have started introducing in the LMS. We have started with flashcards, okay, and we have introduced glossary notes, wherein you can log in and then glossary notes will be like gist of notes, end-to-end summary of the notes. Let's suppose you have blocked the exam. Your exam is 1 week or 10 days ahead, and then you just want to go through the summary of the notes. So it will have all the thresholds. It will have all the phase-out limits. All those details will be available in glossary notes. So what we can do is I can show you a summary of. We'll do it. Can you share your? I'll give you just a sample walkthrough of the portal, the LMS. Let's see if this. Okay. So what I meant is, once you log in into the LMS, this is the welcome screen that you'll get. Okay. So let's take an example of this particular case where we are talking about part 3. Part 3, once you click on part 3, we have designed the course in such a way where you can access the community forum. All right. Community forum wherein you can post each and every question inside this community forum, wherein somebody, if you can post a question in this particular forum and submit your query. Let's suppose somebody had some issue understanding what is circular 230. So once you have posted this particular course, somebody will answer this particular question, whatever you have asked in this particular forum. X or Y will reply to this particular question. You yourself can answer. If you know something about circular 230, you can post a submit here. So that this will be an interactive portal where somebody does not know a specific concept. Someone else can answer on their behalf. Okay, that is one thing. That is community forum. And we have flashcards also. Okay, flashcards, we have different sets, almost 9 sets. Each set will have its own question and answer session. For each set, we have approximately 20 questions. So approximately we'll have 180 to 200 one-pointer answers there. Okay. So every day you can make a note of 20 questions, write down on a single paper, and then prepare yourself with respect to flashcards. Okay. And we have mentoring sessions available. This will be a Zoom or Zoho meeting call where we can conduct a webinar on the go. And then we can all collaborate and then discuss whatever doubts are there with respect to that paper. Okay. And this is what the glossary notes that I'm talking about. Okay. So glossary notes for part 3. Let's suppose all the forms will be listed here. You can see the forms here, right? You want me to zoom it for you? So this is the glossary notes that I'm talking about. There are various forms like what is 8275, what is 8879, what is the 9 installment agreement form, return prepare complaint form. Once you are done with your EA, what form do you submit? All the gist of all the forms will be there as part of glossary notes. Glossary notes, you can very well understand it as the summary of whatever we have discussed in the whole part 3. Okay, if you can just go through this particular glossary notes and then have prepare your own notes from this, you are good to go. It will be like summarized notes. Even before exam, it will help you. Okay. So having said that, let's go to prometric side and understand what is that we need to study as part of enrolled agent exam for part 2. Okay. So as you can see, we are on the prometric side. See, I encourage you to first apply for PTIN. You will have to apply for PTIN and then be ready to book the slots. As you know, the slots are not available throughout the year. For international folks, the current slot is only from October 9th to 28th and October 21st to 27th. So after that, we will have one more slot in December. Post that, we'll have one in January and February 3rd to 9th may or may not happen. Okay. So you have to keep looking at these slots day in and day out, because somebody might have already booked a slot and somebody could have cancelled that particular slot also. So if somebody is cancelling, you will get a slot on that particular day or venue. Very limited, meaning it will not be open throughout the year. So if you are looking for Hyderabad, the whole India we have 3 to 4 centers. That's all, right? One is Hyderabad, Bangalore, and Delhi. Not even 4. Mumbai is not there. Only these 3. So if you are targeting Hyderabad, you will have to log in every day, preferably in the morning, and then check for the slots that are available. You will have to create an account here first. In the Prometric, you will have to create an account here. Once you click the schedule, it will ask to create an account. For that, you will have to apply PTIN. Okay, PTIN you will have to apply, get a notary, submit your passport. Using your passport, you can get the notary done at any of the centers, and then submit those 2 documents. Your PTIN will be done within 3 to 4 weeks. Only if you have the PTIN, you are eligible to book the slot. Passport is mandatory. It is simpler in order to get the PTIN approved. If you have the passport ready, we have other authorized documents like PAN and Aadhaar also. But then it will take time. There are cases where people got rejected for the PTINs also. So it's better if you have valid passport. Your passport already expired, is it? You apply for the passport. Passport comes within a week. You apply. What do you call that? There's some term there for passports. You'll get it in a rapid this thing on a super fast express checkout kind of a way. Within 1 week to 15 days, passport will come. So first, if you don't even have passport, first apply for passport. Okay. So we are looking at the syllabus of part 2. So what is that we need to understand from part 2? So as I've explained earlier, part 1 talks about individual at an individual level. Part 2 talks about entity level. Part 3 talks about tax resolution. So as part of enrolled agent exam, we are looking at 3 parts. One is individual, 2 is entity, third is representation before the IRS. How do you represent a client or a entity? Okay. So as you can see, we have domain 1, business units and considerations. We have 30 questions. Okay. So as part of part 1, part 2, the first chapter is it covers whole business entities. What are sole proprietorships? What are partnerships, corporations, S corporations, LLCs, and what are tax exempt organizations, and what are the reporting requirements that we need to do as part of business entities. So we'll look in detail how do you tax partnerships. Okay. what is partnership income, what are its expenses, and when we distribute income from partnership, what happens, what are flow through entities, what are PTEs, and what exactly is the basis of partnership, what happens when a partner disposes of its partner's interest, how do you form a partnership, how do you dissolve a partnership, forming a partnership and dissolution of partnership. All that we'll look at in detail as part of domain 1. After partnerships, we'll look into corporations. Okay. Corporations, when we say, if we mention corporation, corporation is the C corporation. Okay. If we just say corporation in US jargon, it's a C corporation. Until unless we mention S corporation, it is not a corporation. If we say corporation, it is a C corporation. So what are the C corporation filing requirements, due dates and penalties? It's earnings and profits, dividends and distributions. How do we make estimated tax payments for a C corporation? How do you form a corporation? Okay. And what are closely held corporations? Under that, we have S corporations also. S corporation is a pass-through entity. It's a PTE. Okay. So what are the requirements to form a S corporation? Are there any elections? What are the incomes and expenses and separately stated items? How do we calculate the basis of S corporation? And how do we terminate and reinstate? This is domain 1. As part of domain 1, we have 30 questions. Okay. So overall, we have how many questions as part of enrolled agent examination? Overall, we have 100 questions. Out of 100 questions, only 85 questions will be value. Other 15 questions will be experimental. Right. So the 85 questions, out of 85 questions, you will have to get 70 right. Okay. The other 15 will be experimental, will not be valued. 85 में 70 आना, you will be qualified. 70. So out of that 85 questions, the first domain talks about 30 questions. Correct? Business entities, how do you form business entities? All the 5 business entities. When we say business entities, remember 5. What are 5? Sole proprietorship, partnerships, S corp, C corp, and LLCs. LLCs. Limited liability, not a corporation. That is what limited liability company. We cannot mix corporation and limited liability. So we need to understand 5 things. 5 things in every aspect. 5 things we said A, B, C, D, E. We understood adjustments, benefits, credits, deductions, exceptions, and exemptions as part of individual paper 1. These are 5 things. Again, 5 things in business entities. What are the 5 things? Sole proprietorships, partnerships, corporations, S corporation, C corporation, and LLCs. If we know these 5 things, the entities thing is done. But then there are farmers. We need to understand how do we for farmers concept specialized returns will be there. This will be exception. Day in day out, if we are in practice, what we look at is these 5 things. Okay. So domain 2. What does domain 2 talk about? Domain 2 is of 37 questions. Okay. Domain 2 talks about business income and what are the gross reserves, cost of goods sold, and what is at risk limitation, what are the expenses, deductions, and credits as part of businesses. So how much can we claim as part of business expenses? All those deductions and credits will be discussed as part of second chapter. Employment taxes, net operating losses, business assets, and basis of business assets. Basis. See, second unit, second paper talks in depth of business assets and its basis. How to calculate basis, what is like and exchange, capitalization, all that will be looked at in depth as part of domain 2 in part 2. And analysis of financial records, balance sheet, depreciation recovery, reconciliation of tax versus books, M1, M2, M3. All these 3 schedules will be looked at in depth. How do you reconcile the tax with respect to books? Books means tax ki, how do you talk? I mean, whatever you are claiming, whatever you have noted down in your books, the reconciliation of the tax and books is what these M1, M2, M3 schedules will talk about. So how do you advise? This is the new unit that they've added, new chapter that they've added as part of part 2. Advising the business taxpayer. What are the reporting and filing obligations? Form 8300. If you are sending, if you have received more than $10,000 in a single tax year, which form do you file? Form 8300. We look at how do we advise the taxpayer. The employment taxes, how many years that you need to keep the records. We have looked at this record keeping in part 3 also, right? Yes. So life cycle of the business, what is the type of industry? Workers classification, meaning usually worker, what will be the worker? He'll be a employee or he'll be an independent contractor. If you are employee, you'll be straight away reporting to your employer. Correct? You are working for TCS. TCS is your employer. You are an employee. So if you are not an employee, you'll be an independent contractor. You'll be working as an independent contractor. For employee, he'll be getting W2. For independent contractor, he'll be getting a 1099 NEC. Non-employee contractor. NEC is called non-employee contractor. Only two source documents that you'll get. Either you'll get a W2 or a 1099 income documents. Okay. So this is domain 2. Domain 2 is 37 questions. The maximum number of questions are coming up in domain 2. Okay. Next, we'll look at domain 3. What is domain 3? Specialized returns and taxpayers. These are 18 questions. Okay. So again, as we have looked at in part 1, we'll have trust and estates. See, when we looked at part 1, we understood trust and estates with respect to an individual. Trust and estate with respect to individual. In part 2, these specialized returns and taxpayers we'll be looking at trust and estates at a entity level. Part 2 of Enrolled Agent talks everything at a entity level, at a business. This is a business paper based. So everything with respect to a business at entity level will be checked. Okay. So trust and estate income taxes. What are fraudulent trusts? What are separately stated items, filing requirements, taxes and penalties? What are exempt organizations? Okay. And how do you file and which forms? How to get the tax exempt status? The form 990. The retirement plans and farmers. Okay. Rental property and rental incomes. So this syllabus is a bit vast, and then we'll have to understand everything with respect to business entities, business income and expenses, and specialized returns. So basically, we'll have only 3 domains as part of part 2. Okay. So let's go to a fresh. I hope you're getting a new book for part 2, right? So please get the book and then open your book. Bhagwan ka naam leke. Let's start. Please write SE part 2 MCQs. SE part 2 MCQs. Let's make a T table. Section and questions. Section and questions. Section and questions. Please write. Business entity. Section and questions. Under section business entities. Under section business entities, questions, under questions on the right hand side, 30. Is it matching? My bad. This is 30, right? 30, 30. Matching, right? 30, 37, and 18. So please write under business entities 30. Just write the main topic. Please don't write the chapters. Business entities is fine. Please write business entities. These business entities. Okay. 30. Second section, business tax preparation. Business tax preparation. 37 questions. Business tax preparation, 37 questions. Next, section 3, specialized returns and taxpayers, 18 questions. So in total, we'll be getting 85. So out of 85, you'll have to get 70, right? So the others are experimental questions. 15 are experimental questions. So we need to focus on, see, these specialized returns and taxpayers. This will be simple. These 18 questions, you'll have to target more, and then the first unit also 30 questions, 48. So the business income, assets and basis and all. See, part 2 majorly talks about basis. You'll have to understand how a basis is calculated at a entity level. Basis means cost. So I will explain all that, and then understand each and everything. You have to access our LMS in and out. Clear individual section wise MCQs will have to answer at least twice. At least twice we'll have to solve. Chapter wise we'll have to target. Let's suppose we are starting with section 1 today. Okay, you have targeted section 1. Under section 1, make yourself a target like 40 questions today, MCQs. The same set you go to flashcards. Understand the flashcards, go to business analytics and then solve individual MCQs. From the answers, see, each MCQ will have 4 questions in one MCQ itself. Right? Under one question, there will be 4 options. So if somebody is asking you something in a question, you have to justify why the other three multiple choices are wrong. Only this is right. That way you'll have understanding better. So each question in turn will give you 4 more answers. If something new is coming up, you can write down in the handwritten notes. Okay. That way you'll have to make a plan, and once you are done with flashcards, individual MCQs, go to glossary notes. Like I've shown, the glossary notes I've shown, right? The glossary notes. The glossary notes will have the gist of everything. So make sure you are going through the glossary notes also. Okay, where it will give you a summary of everything, so that you will get used to it. So be specific. Keep only 30 days for business tax preparation itself. Those 30 days should be very much focused. Make a study planner and then go chapter wise, and then prepare a timetable according to that. You'll understand. First, videos, we go through all the videos for the recording. These recordings will be available throughout. So if you are getting access to the recordings, go through the recordings first. Make the notes of whatever we are trying to explain for all the 3 sections. Solve the MCQs multiple times. Okay, and write whatever the new points that are coming up in the MCQs in the handwritten notes. Go through the flashcards. Understand the flashcard. You can prepare your own flashcards also. Okay, and then make use of the handwritten notes and then note down everything there in multicolored, using multicolored pen, so that it will be easy to grasp. And if you close your eyes and then think in the exam, prometric exam hall, that in your subconscious, that visualization will help you. If you write in multiple colors, you will be able to recollect it better. The only reason why you are asking you to write is, when we are writing, you cannot deviate. If I am talking and then you are only listening, your mind will be somewhere else and your body will be here. So the best way to prepare is complete the paper within 30 days. Whatever is fresh in your mind, book the slot and clear it off immediately. That way it will be very fresh. After 6 months, if you open your book, it will be all again. You'll have to prepare the same thing. Like you are preparing now, writing the notes when I'm dictating, and then I'm trying to make you understand. That will be very fresh in your mind. So look for the slot straight away. Clear it off in this year itself, whenever you are getting the slot. Okay. So please put the heading section 1. Section 1, business entities and considerations. Business entities and considerations. Business entities and considerations. Under that, Unit 1, business entities. Business entities. First question, what is a sole proprietorship? What is a sole proprietorship? Like I've explained earlier, see, in business entities, there are only five things that we need to be on top of our game. One is sole proprietorship. Sole proprietorship only, it talks about an individual, sole proprietorship. You are a sole proprietor. It will be on your SSN itself. SSN is social security number. You need not have any EIN also. Any business that you need to incorporate will have a employer identification number. What will it have? Employer identification number. Employer identification number will be given for an entity. An individual will be given a social security number. It is equivalent to, you can say, Aadhaar in India. But then Aadhaar will not have those many privileges as social security number has. If you're paying tax to a US government, you will be getting all those credits and privileges. If you pay tax to Indian government, what all credits and privileges we get, we all know. We don't want to comment on what we are getting because that's the difference between a developing country and a developed country. Based on social, you will be treated like if a person who is only on a business visa there will not get a social security number there. Person who is there as a resident for more than 183 days, people who are there on a working visa, people who are there on a valid education visa will get a proper social security number. So for an individual, in order to get a sole proprietorship running, if you want to start a business there, one fine day you thought, how many days should I work? I'll start my own business. So you need not go and form a LLC, or you need not go and form a partnership, go for a partner. All the rules are not there. You can start your business very well as a single individual, as a sole proprietorship only on your SSN also. You need not have EIN. All that will be expensive, right? Because somebody, all that will incur cost, correct? For a business, for a small these things to start, you need not have huge investments also. Without having those monetary challenges also, you can start your own business. For that, sole proprietorship entity is a right choice. Understood? Right? One is sole proprietorship, two is partnership, three is C Corp, four is S Corp, five is LLC. All these five will be talking about in the section 1, business entities. All right. So let's write what is a sole proprietorship. It is an unincorporated business. It is an unincorporated business that is owned and controlled by one person. It is owned and controlled by one person. It is an unincorporated business that is owned and controlled by one person. Next point. A sole proprietorship is not a separate legal entity. A sole proprietorship is not a separate legal entity. Next point. A sole proprietorship may be a single person. A sole proprietorship may be a single person, or it may have several employees. Or it may have several employees. but there is only one owner. There is only one owner who accepts. There is only one owner who accepts all the risk and liability of the business. All the risk and liability of the business. So what is that they are saying? A sole proprietorship can be a single individual or a multiple employees can work in that particular business, but only a single person will accept all the risk and liability of that particular business. If you are opening a business, there is always a risk that it will go to zero. Correct? Business may happen or may not happen. There is a risk involved. Right? There is a financial risk, right? And there will be other sorts of risks also. What are other sorts of risks? Let's suppose you are mowing your lawn. Mowing lawn is also a business in US, correct? When you are working as a gardener, you want to start your own business. You are mowing a lawn for a individual. While mowing that lawn, one particular part of your mower got twisted, and then it has hit a particular person who is walking on a road in his eye. He lost his eye. The immediate reaction will be that person will come and sue you. In India, see defamation case and all, right? If somebody is talking ill about you, you can file a defamation case against him, and then you can take him to court. In US, there are people who only live on this particular suing of people, suing of entities. Anything that happen, they'll say, "I'll sue you," and then they'll sue that particular person, and then make sure if that particular business is on an individual name, everything that is attached to that particular business, like he might be having his home, he might be having some assets, all that can be taken by that particular person who, if at all he's suing you and he's winning that particular case, he can catch hold of your property, your assets and whatnot. That structure is there in US. Let's suppose that is the risk of opening a business on your social number. So most people will not take this particular step. Why? There is a risk of financial risk will be there, and then all those assets that a person has can also be taken by X or Y gentlemen if they are suing you and they are winning that particular case. Understood, right? So the entity that I've talked about is limited liability company. I've already talked about limited liability. What is limited liability? They can sue you, but then that person cannot take your personal assets, and then they cannot take all your money, and then whatever they cannot make you bankrupt. Basically, the liability is limited. That is the reason it is called limited liability. You can sue my company, you can sue my organization, but you cannot sue me. I am protected. Your entity is different and you are different. Limited liability company. So these are different flavors that we are talking about. What happens in terms of corporation? What happens in terms of partnership? What will happen in terms of S corporation? All that we'll look at in detail. But sole proprietorship has its own pros and cons. So the risk is higher if somebody is suing you, right? And if you are a single individual and starting business, and financial risk is also there, because if you thought this business will do very well, and then it did not work out after 6 months or 1 year, financial risk is also there, right? So that is what we are trying to understand, various concepts, various entities of business, one in which way we can start our business in US. So the next point, it is the simplest business type. It is the simplest business type, and the most easiest to start. It is the simplest business type and the most easiest to start. It is the simplest business type and most easiest to start. Okay. Its liabilities are owner's personal liabilities. Its liabilities are owner's personal liabilities. Its liabilities are owner's personal liabilities. Next point, the income and expenses from such business, the income and expenses from such business will be calculated on Schedule C. The income and expenses from such business will be calculated on Schedule C. On Schedule C form, and reported on personal tax return form 1040, and reported on personal tax return form 1040. So where do we calculate the income and expenses? We'll be calculating the income and expenses on Schedule C. And in form 1040, we calculate all this in Schedule C and then report it on personal tax return. So usually business entities have separate forms, right? Like for corporations, it's form 1120. C corporation, we file form 1120. For S corporation, S corporation is an election, right? So S corporation we file form 1120S. For partnership, we will file form 1065. So for when it comes to sole proprietorship, we don't file some separate form. We just note down all the income and expenses in Schedule C and then file it with personal return. Even though an individual has a business entity, he needs to file his personal return also, right? So along with personal return, we'll calculate the income and expenses, profit or loss, and then input in form 1040 itself for sole proprietorship. Got it? Both are one and the same. That's what I'm saying. So whatever we'll file in form 1040 itself. Whatever the profit or loss that you are generating out of the business, we'll calculate. Are we in surplus or are we in loss? And then we calculate everything in Schedule C and file along with our form 1040. Okay. Next question. What is a LLC? What is a LLC? So LLC, like I've told you, it's a limited liability company. If somebody is trying to sue you also, they cannot, it acts like a wall. A limited liability company, the liability will be limited with respect to financial or with respect to people taking you to bankruptcy and all, suing you and all. The liability for an individual will be limited with respect to LLC. So LLC will be formed under state. So each state will have its own state of secretary. Will have to file articles of organization. Articles of organization for LLC. This is with respect to state to state. Like you can have a LLC if you are living in Nevada. You will have a state of secretary in Nevada. If you are living in Wyoming, state of secretary, we will file LLC with respect to state. Each state will have to file articles of organization. And we have to make it active. Every year we'll have to renew your LLC. Okay. This will be formed at a state level. So LLC itself, if you are forming an LLC, you are only a single member in that particular LLC. It is treated as a disregarded entity in front of IRS. IRS will treat that particular entity as disregarded. It is not even regarded as a business entity. It's a disregarded proportion is what is defined in IRS Internal Revenue Code. When we say LLC, a LLC can make an election for it to be treated as a corporation. An LLC can make an election for it to be treated as a S corporation. when we are saying LLC, an LLC can file as a disregarded entity, or it can file as a corporation, or it can file as a S corporation. That choice is there. How to file as a C corporation? We'll have to make an election. How to file as a S corporation? We have to make an election. Making an election is filing one more form. That's all. For example, you have started an LLC. You want to file it as a, you want to make it a transition as a S corporation. What form will you file? You will have to file a form 2553. If you file a form 2553, you are asking the government to consider my LLC as a S corporation. So obviously, if there are advantages to file as a S corporation, you'll obviously take it, right? So in order to take those advantages and all, you will have to convert that particular LLC into a S corporation. How to convert? By filing form 2553. Same thing if you want to make it as a C corporation, you will file form 8832. See, you have started in the year 2023 as LLC. You have started a very slow, very humble background, and then very low single member you have started. After 5 years, lot of your friends, investors came in, and then your company have grown many-fold. It went to 100 employees, 200 employees, and then you're making millions of dollars. If you're making millions of dollars, obviously you'll have to take tax advantages, right? So if you go for S corporation, there are pros. If you are remaining as a LLC, there are cons. So if you want to take all those tax advantages, you want to move your particular LLC to S corporation. In order to get to a S corporation, you'll have to file. It's an election. You'll have to file form 2553. We'll look at all that in detail. Okay. So let's write. Limited liability company is a type of business entity. Limited liability company is a type of business entity. That may be formed under state law. That may be formed under state law. Full stop. An LLC will be treated. LLC will be treated for federal tax purposes. An LLC will be treated for federal tax purposes. Either as semicolon, either as first point, a disregarded entity. A disregarded entity. Then first point. Second point, a corporation. After corporation, comma. If the entity elects, please write elects in a different color. The entity elects. Elects is making an election. The entity elects to be treated as a corporation. Next point, or as a partnership. As a partnership. So what we're saying, an LLC, if you are forming an LLC, it can be treated as a disregarded entity, or it can be treated as a corporation, or it can be treated as a partnership also. If a LLC, let's suppose you have started an LLC and you're doing very well, you're getting a lot of income. One of your friends has seen, kya business kar raha hai bhai bolte, you will say, I'm doing all this is the way forward. This much input of this is the investment and this is the revenue that I'm generating. So he might be interested going forward after 6 months. He might come and join you as a partner. So if you start as an LLC, you can transition your business entity later into a C corporation, S corporation, or a partnership also. Okay. Next point. Most LLCs in the United States, most LLCs in the United States are taxed as most LLCs in the United States are taxed as partnerships. If a multi-member LLC, bracket MMLLC, if a multi-member LLC is treated as, if a multi-member LLC is treated as a partnership for tax purposes, is treated as a partnership for tax purposes. It must file, it must file, it must file Form 1065. File for 1065. 1065 is for partnership. It must file Form 1065 annually. And one of its owners, and one of its owners, and one of its owners slash members must sign the return. One of its owners must sign the return. So if you are filing as a 1065, what is partnership? More than one partner. If you have two friends have joined, then more than one member is there in a business entity, it is called a partnership. So that partner, in that partnership, one of the members has to sign that particular return annually. If you are filing, which form will you file as partnership? Form 1065. Okay. Next point. A PLLC, a professional service liability company, professional service liability company, in brackets PLLC, is a type of LLC, is a type of LLC that is owned and operated that is owned and operated by licensed professionals, by licensed professionals such as by licensed professionals such as doctors, lawyers, and CPAs. CPAs, certified public accountants, CPAs. Next important point, last point, a single member LLC, a single member LLC reports all its income and expenses. Single member LLC reports all its income and expenses on the federal tax return, on the federal tax return of the owner, of the owner through Schedule C, through Schedule C. Next, please make a T table, T table, single member LLC, multi-member LLC, single member LLC and multi-member LLC. So under single member LLC, what happens? Single member LLC is a member having only one owner. So if you are more than one, it is by default treated as a partnership. Single member LLC, it is by default treated as a disregarded entity. By IRS, in federal tax, this thing, it is a disregarded entity, like only one member. Sole proprietorship is different altogether. Sole proprietorship is based on SSN. LLC will be based on EIN, employer identification number. So it's a LLC, it's an entity. Sole proprietorship is not an entity. It's an individual making a business. It's an unincorporated business. For LLC, you'll incorporate. How will you incorporate? Articles of organization. For sole proprietorship, there is no incorporation. Right away, you can. There is no. It is free of cost basically. For LLC, with that specific state, you will have to renew every year. You'll have to pay, like you have done in MeSeva or eSeva. That is sole proprietorship here. But then, whatever entity that you are filing, let's suppose LLC is there, you will have to file it with at a state level. Each state will have its own state of secretary. You'll have to renew it every year, like $230, $250. That entity status needs to be maintained across all states. Each state will be having its own specific this thing charges. In order to maintain that particular LLC, you'll have to showcase your income and expense. For a single member LLC, you'll have to showcase your income and expense on Schedule C. For multiple member LLC, you'll file a form 1065. For 1065, what happens? A Schedule K1 is getting generated. For multiple members, a Schedule K1 will be generated where, let's suppose your partnership has 3 members. Each member will have a different Schedule K1. That Schedule K1 will in turn, they'll have to file in their form 1040. It is a structure. I'll show you the structure. Okay. So for a single member, it will be a disregarded entity. For a multiple member, it is a partnership. If a single member is an LLC, is an individual, then LLC will be taxed as a sole proprietorship. Right? Schedule C. If it is a multiple member, it is taxed as a form 1062, Schedule K1. So in that it flows through to Schedule E. If a single member LLC is a business entity, then the LLC will be taxed as a C corp or a S corp. If the single member in the LLC is a business entity, then the LLC will be taxed as a C corp or a S corp. Like I've told you earlier, if you want to file as a C corp, you will have to make an election by filing form 8832. If you want to file as an S corp, you will have to make an election by filing form 2553. Let's suppose you are a multi-member LLC, it can be treated as a C corp or S corp. Again, the multi-member LLC has to make an election by filing form 8832 to file as a C corporation. If you want to file as a S corporation, you will have to file form 2553. You have to remember 2 forms. What are those? 8832 to file as a C corporation, 2553 to file as a S corporation. Again, 8832 to file as a C corporation, 2553 as a S corporation. Only 2 forms. It's a subchapter. We'll get in detail. What is C corporation? What is S corporation? We'll look at all those forms. So please write the differences between the T table. First point, by default, an LLC is treated as a disregarded entity under single member LLC. By default, an LLC will be treated as a disregarded entity. Under multiple member LLC, by default, a multiple member LLC is treated as a partnership. Multiple member LLC is treated as a partnership. Right. So what is the partnership form? Form 1065. Form. Please write it in a different color. So please write. Next point. If a single member LLC, if a single member LLC, the single member is an LLC, is an individual, then the LLC will be taxed as a sole proprietorship. Then the LLC will be treated as a sole proprietorship. Under multiple member LLC, when treated as a partnership, the entity will file form. The entity will file form 1065. When treated as a partnership, the entity will file form 1065. And the partners will get Schedule K1. Partners will get Schedule K1. Schedule K1 in a different color, which flows into their personal tax return. In brackets 1040 through Schedule E. Under single member LLC, next point. If the single member in the LLC, is a business entity, the single member in the LLC is a business entity, then the LLC will be taxed as C Corp or S Corp in red, please. C Corp or S Corp first point, the LLC must file form 8832. 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 Entity classification election to be taxed as C corporation. Entity classification election to be taxed as C corporation. Next point. LLC must file form 2553 election by a small business corporation to be treated as S corporation. Under multiple member LLC, even a multiple member LLC can be treated as C corp or S corp. Are we done with this? Single member. Under multiple member LLC, even a multiple member LLC can be treated as this point, last point. Even a multiple member LLC can be treated as C corp or S corp. The multiple member LLC must file Form 8832 to be taxed as C corporation. The MMLLC can file Form 2553 to be taxed as S corporation. You understand the difference, right? Okay. So let's look at next question. What are partnerships? What are so please write an unincorporated organization. An unincorporated organization an unincorporated organization. See, like I've explained earlier in the class, you can see the board, right? You can please, I'll try and explain here. See, you remember the acronym PSL. What is PSL? What is PSL? You remember the acronym PSL. It stands for pass through entity. Pass through entity. Are you able to see what is pass through entity? PSL. P is partnership. P is S is S corporation. Right? L is MMLLC. What is MMLLC? Multiple member LLC. These are the word PSL. You remember the acronym PSL? It stands for pass through entity. What is pass through entity? These entities do not pay any taxes. The shareholders or the members of this particular entity will pay the taxes. It passes through. The partnership will pass through its profit or loss to its members. So, partnership taxpayer, the members pays, it passes through its income and expense to its members. Understood? The entity will not pay any tax. It'll pass on its profit or loss to its members. So, what are such pass-through entities? One is partnership, two is S corporation, three is multiple member LLC. The main disadvantage of a C corporation is the entity will pay the tax and its shareholders will also pay the tax in terms of dividends. If you receive the dividend, on this dividend also you are expected to pay the tax. So the main disadvantages of C corporation is double taxation. What is the disadvantage? The entity is also paying the tax. The shareholder is also paying the tax. So in order to avoid this particular double taxation, people usually choose these pass-through entities. Why? That this double taxation can be avoided in terms of pass-through entities. Why? The entity will not pay any tax. Only its shareholders will pay the tax. So who are all the shareholders in an S corp? It can have multiple members, right? So all those multiple members will either they'll receive their schedule K1s. What will they receive? Schedule K1s. The K1 will have the income and expenses. All those details will be part of this K1. This particular K1 will flow to their schedule E. Individual return schedule E. So the shareholders will file schedule E as part of form 1040. So this particular S corp will not pay any tax. Only the individual will pay the tax. Same thing will happen for partnership. Partnership will also give you a schedule K1. And the individual will file for schedule E under 1040. Multiple member LLC will also does not pay any tax. The individual will file X or Y will file schedule C, profit or loss, form 1040. So partnership, when somebody says partnership, the first thing that you should recollect is PSL, PTE. PTE. What is PTE? Pass through entity. Entity will not pay anything. Tumbarlo. Only shareholders are members. Understood? You want to note it down or understood, right? So what is the acronym that we said? It's a PSL. What is PSL? Pakistan Super League. PSL is Pakistan Super League. It is equivalent to IPL. Or you can remember the acronym special, SPL. You can remember, you can make your own acronyms, PSL, SPL. Pass-through entities special or pass-through entities Pakistan Super League. So what is one more thing under SPL is usually all the returns will be filed. What is the due date? April 15th of a tax year is the due date. April 15th is the due date, right? Any entity that we file is 15th of April. For pass-through entities, the due date will be 15th of March. 15th of, so Corp, partnership or LLC need to file their tax returns by 15th of March. C corporation can file its tax return by 15th of April. So only for these pass-through entities, the filing due date is 15th March. Even if they apply for extension, they'll get 6 months extension, right? If they apply for extension, any business entity. So instead of October 15th, usually extension date will be October 15th, right? So these pass-through entities, they'll get as September 15th, right? For PTEs, the due date will be 15th September. Understood? So please write, what are partnerships? फटाफट लिखते हैं. This is the last question. Okay. An unincorporated organization, please write, with two or more owners. An unincorporated organization with two or more owners is generally classified as an unincorporated organization with two or more owners is generally classified as a partnership. An unincorporated organization with two or more owners is generally classified as a partnership for federal tax purposes. For federal tax purposes. If its members, if its members carry on a business, if its members carry on a business and divide its profits. If its members carry on a business and divide its profits. Next point, a partnership must file an annual informational return. Partnership must file an annual informational return. The partnership must file an annual informational return. Form 1065. Form 1065 to report. Partnership must file an annual information return. Form 1065 to report the income, deductions, report the income, deductions, gains and losses, to report the income, deductions, gains and losses from its operations, but the partnership does not, but the partnership itself, does not pay income tax. But the partnership itself does not pay income tax. You understood, right? It's a pass through. It's a pass through entity. So please write instead, comma, instead, any profits or losses, any profits or losses, any profits or losses pass through in double quotes, pass through. Any profits or losses pass through to its partners. Any profits or losses pass through to its partners. Comma, who are then responsible for reporting their respective shares, who are then responsible for reporting their respective shares of partnerships income, or loss on their individual returns, Next point, a partnership can have, unlimited number of partners. Partnership can have unlimited number of partners. And the partners can be And the partners can be foreign or domestic. And the partners can be foreign or domestic. So if you are forming a partnership, there is no restriction on number of members. But if you are forming a S corporation, if you are choosing a S corporation as an entity, it can have only 100 members. There is a restriction. For a partnership, there are no restrictions, unlimited number of partners. And the partners can be non-resident aliens also, like people who are foreign, who are not in US. They can also be be a member in a partnership. Okay. See, if we are for LLC, it will be a member. For a partnership, it will be a member. For a C corporation, it will be a shareholder. The terminology for a corporation, it will be a shareholder. For a LLC, it will be a member. For a partnership, it will be a member. Okay, it is defined that way. So please write next point. It is a PTA. It is a pass-through entity. It is a pass-through entity. A partnership must always have at least one general partner. A partnership must always have at least one general partner. A partnership must always have at least one general partner. Whose actions legally bind by the business. Whose actions legally bind by the business. Whose actions legally bind by the business. And who is legally responsible for a who is legally responsible for a who is legally responsible for a partnerships, debts and liabilities. Who is legally responsible for partnerships, debts and liabilities. Next point. Partnership annual tax return. Partnerships annual tax return. Please write. A partnership's annual tax return is filed on Form 1065 is filed on Form 1065 US return of partnership income. A partnership's annual tax return is filed on Form 1065 US return of partnership income. Next point. Partners are not employees of the business. Partners are not employees of the business and they should not be issued a Form W2. Partners are not employees of the business and they should not be issued a Form W2. What will partnership will issue? K1, Schedule K1. So Form W2 usually will be issued only for employees. So as these are not employees of the business, no W2 will be issued, only Schedule K1 will be issued. Okay, please write. The partnership, next point, the partnership must furnish a copy. The partnership must furnish a copy of Schedule K1 of Schedule K1 partnership must furnish a copy of Schedule K1 to each of its partners, to each of its partners each of its partners. Partnership must furnish a copy of Schedule K1 to each of its partners, showing the income and losses allocated to him. Showing the income and losses allocated to him. Okay. Next point. A partnership return must show a partnership return must show the name and address of each partner. A partnership return must show the name and address of each partner. And the partner's share of taxable income. And the partner's share of taxable income. The return must be signed by a the return must be signed by a general partner. The return must be signed by a general partner. Next point. Once the partner once the partners receive schedule K1, once the partners receive schedule K1, once the partners receive schedule K1, they must report their share of profit or loss. They must report their share of profit or loss on their personal tax return. They must report their share of profit or loss on their personal tax return. Form 1040 using Schedule E Part 2. Using Schedule E Part 2. Done. If TP and SP jointly own and operate, if TP and SP jointly own and operate, TP and SP jointly own and operate an unincorporated business, and share in the profits and sharing the profits and losses. They are treated as partners in a partnership. They are treated as partners in a partnership. They are treated as partners in a partnership. Regardless of whether they have a formal partnership agreement. Regardless of whether they have a formal partnership agreement. See, usually what happens is, for partnership, there is no need for a incorporation. No need to file anything or no need to form articles of organization or articles of incorporation. You and I can start a partnership right away with a formal handshake. Let's be partners. Let's start a business. That's all. It is as simple as that. So it's saying they need not have any formal partnership agreement. They can jointly own and operate an unincorporated business, share profits and loss. They are treated as partners. Okay. Comma, unless they opted for QJV election. Unless they opted for QJV election. In brackets, right? Qualified joint venture. In brackets, qualified joint venture. Qualified joint venture. Next point. If TP and SP own an unincorporated business, if TP and SP owned an unincorporated business in a community property state, in a community property state, then such business can be treated as, and such business can be treated as QJV in brackets. Both are if both are sole proprietors. In brackets, if both are sole proprietors. Next, partnerships, if both are partners. एक छोटा नोट लिख लो. नोट नोट में you can just note down what are community property states. Note community property states. So please write a small acronym here. It says, see, do you like dogs? You don't like cats. Let's suppose community property states. Cats పిల్లిలు అంటే ఇష్టం మనకి ఇష్టం లేదు. సో కమ్యూనిటీ ప్రాపర్టీ స్టేట్ అనగానే ఆ కమ్యూనిటీ ప్రాపర్టీ స్టేట్ లో క్యాట్స్ అంటే ఇష్టం. ఎగ్జాంపుల్, పిల్లిని ఇష్టపడే స్టేట్స్ ని కమ్యూనిటీ ప్రాపర్టీ స్టేట్స్ అంటారు. జస్ట్ రిమెంబర్ దిస్ acronym. I love cats now. I love ILCATNW. Some crazy acronym. What are community property states is that states which they love the cats. Just remember like that. So ILCATNW. What is I? Idaho. L, Louisiana. C, California. A, Arizona. T, Texas. I love cat. Right? Next, NW. You can mention, you can remember NW as now. I love cats now. I love cat now. What is N? Nevada. Next, New Mexico, Washington, and Wisconsin. These are called community property states. What is this called? Community property states. So short acronym is I love cat now. So please write a small chota note. Community property states are Idaho, Louisiana, California, Arizona, Texas, Nevada, New Mexico, Washington, Wisconsin. So N comes 2 times, W comes 2 times. N comes 2 times, W comes 2 times. Community property states: Idaho, Louisiana, California, Arizona, Texas, Nevada, New Mexico, Washington, and Wisconsin. The acronym is I love cats. Okay. So community property states it will be treated differently. So let's look at US partnership return. There is a annual informational return. It says, let's see. So there is a heading. So what is the name of the partnership? What is the principal business activity? And in which area it is located? When did you start the business? Okay. Is it a final return? Is it what accounting method are they using? Is it cash or accrual? So number of Schedule K1s attached for each person who was a partner at any time of the year. So each partner will get a Schedule K1. So what are the gross receipts, cost of goods sold, gross profit, ordinary income of loss, if for farmers, farm profit and net gain, any salaries and wages, guaranteed payments to partners, repairs and maintenance, bad debts. So this is basically a Form 1065 annual return that we will file with the IRS every year. So when are we expected to file this particular form? When are we supposed to file? Partnership return. It's a pass-through entity. It's a PTE. So PTE's date is March 15th. Usual return will be filed by April 15th. Usually it will be March 15th. That is the third month after the tax year. Usually tax year ends on December 31st of any year. So starting after the end of the tax year, the third month, 15th day will be partnerships tax. So the tax year can be a choice. It can be a calendar year or a fiscal year. Any year that is ending with December 31st is called tax year. Usually the financial year, it ends on December 31st of tax year. So some people might choose fiscal year also. What is fiscal year? Somebody will choose Deepavali. So their tax year starts from Deepavali and ends beyond that. So they can choose their own date. So usually partnership returns should be filed by third month after the end of the tax year. There is a choice. Usually 90% of the people they'll follow the calendar year. Somebody, some crazy this thing, they want to some big organization or some legal teams where they hire and all, they'll have some mental this thing will be there, some superstition. No, they can choose their accounting method will be there. They can choose that, and then depending on that, they'll have to file. It can be tax. If it is tax year, it will be simpler. Otherwise, all other calculations will happen for fiscal year. Okay, you understood what is partnership, right? So, as this is the first class in part 2, let's not go too deep. In the first class itself, I don't want to scare you. So let's continue the rest of the questions in the next class. Okay. Thank you. Thanks for your time. We'll see you in the next class. Bye. Thank you.